Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
Progress is not possible without change, and PRMG is devoted to providing our wholesale partners across the nation with the best combination of products, pricing, technology, and service. Get approved with PRMG today.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. This is created exclusively for Mortgage News Network and brought to you by our good friends at PRMG, who are always working for your best interest. Well, welcome to 2018. You know, if we look back real quick on 2017, finishing off last week, very strong once again with housing data that continued to impress. Case-Shiller numbers showing year-over-year appreciation at 6.2% on the overall, their 20-city index increasing to 6.4%, and pending home sales well above expectations. That's signed contracts on existing homes. Really, the entire housing market for the year of 2017 was very strong. Well, can it continue in 2018? Let's take a look at some of the factors. First of all, one of the biggest ones is the Fed. Now, everybody's talking about, will the Fed hike rates 2, 3, 4 times? They're anticipated to hike 3 times. We think it'll be 2, but that's probably not the story. There is a big changing of the guard at the Fed for sure, because there are vacancies. Stanley Fischer, second in command, gone. William Dudley, third in command, gone. And of course, Janet Yellen, gone, and Jerome Powell stepping in. So it'll be a different look for the Fed. And also some of the real doves will be gone, replaced by some more hawkish members. Now, I don't think that the rate hikes are going to have as much of an influence on mortgage rates as some people do, because historically, as you know, even when the Fed hikes rates, mortgage rates tend to do okay because mortgage rates are more concerned with inflation. But there is one thing that the Fed's doing that I think will have a big impact, and that is unwinding its balance sheet. Now, they started to unwind gradually in October, and you could see towards the end of the year, interest rates did inch higher. That's going to continue ramping up. They started to reduce the amount of mortgage bonds that they're purchasing by $4 billion a month in October. Now, starting this month, they're going to reduce it by $8 billion a month. April, $12 billion a month. You can see it goes on and on. Every 3 months, it'll increase by $4 billion. And they're doing the same thing with treasuries in $6 billion increments every quarter. So buying less and less of these instruments through what they normally would reinvest from principal payments, payoffs, things of that nature, that they would reinvest, they're going to allow their balance sheet to start to finally shrink. The reduction in purchases could have an impact on rates in 2018. How much? It's always hard to say, but you can expect to see interest rates, of course, fluctuate a great deal throughout the year, but overall average about 3/8 or so higher than they were in 2017. Now, will that be a drag on the housing market? A little bit. Will tax changes be a drag on the housing market? A little bit. People don't buy a home, but the tax changes still have the big benefit of capital gains. Appreciation still looks very strong throughout the country. So we think housing is going to be a great investment in 2018. The thing of it is, though, is that a little bit of a headwind from the tax changes, a little bit of a headwind from higher interest rates, and appreciation should drop from its current levels in above 6% to somewhere closer to just below 5%. Now, don't despair. Even 4.5% appreciation, if you took a look at that on a $300,000 home, most people, according to the National Association of Realtors, live there for 10 years. That would give you a $166,000 gain, $166,000 appreciation over that 10 years on that $300,000 home, which is pretty awesome when you consider that most people on that home would invest 10% down or $30,000 and make $166,000 on that investment. By the way, tax-free. So housing still looks to be very strong in 2018. Rates, good. Refinances, waning, because rates will be a little higher, but still good. But the purchase business should be strong, although very competitive. Still a lack of inventory out there. And you know what? Technology, you better embrace it. Use some of the tools we have at MBS Highway to help you, because you're going to need to be the best you can be in 2018. We know things like Rocket Mortgage and other programs out there going direct to consumer are one of the things that we have to protect ourselves and our business and insulate ourselves from being taken over by technology. But now Amazon saying, hey, they're going to be getting into the mortgage business as well. Think about that. Again, You have to be the best you could be. Use the best tools out there. There's nothing like MBS Highway to help you be a pro in 2018. Hey, we'll talk to you next week. Have a great one. Bye-bye.
In today's wholesale environment, providing our broker community with the best combination of product, pricing, and fulfillment is paramount to their success. With a strong net worth and delivery of high-quality performing loans to the secondary market, it is no secret why many brokers choose PRMG as their wholesale partners. PRMG. We strive to be better in all that we do. Get approved with PRMG today.
This is Mortgage News Network.